All right. So we're continuing with a bit of a break from the pitches yet again, and I am going to replace Andris so he can finally take a real rest. But yes, so we're continuing with the next discussion, and this time we're not going to see any startup founders on the stage. We're going to untackle a bit what's happening in the Baltic VC scene. So, folks, round of applause to our Baltic VCs, FIRSTPICK, Lemonade Stand, Change Ventures, and Practica Capital. Round of applause.
Let's go? Yeah? Okay. Apparently I'm moderating, but you can also take over anytime, so...
Oh, no, you didn't say that.
Yeah.
So, I'm moderating.
Okay. I don't think these funds need introduction. Raise the hand who don't know them. Everyone knows you. Yeah. So, but I think I'll start, of course. What unites these funds, it's, they're focusing on the Baltics. They're pre-seed, seed, right? You don't go later than that. But one thing I don't know, and I want to know, can you say very specifically what's the size of your fund and how much is left to invest?
That's a trick question, Jone.
I mean, we came here for
information. So we're at the very end of our second fund. So none left in the second fund, but you can wait for news.
So what's the number?
Second fund, 49 million.
Okay.
Third fund coming.
Third fund coming. So Change Ventures doesn't have money now to invest, or do you?
We're investing.
You are? Okay,
Absolutely.
That's good.
All right. So Lemonade Stand is a 10 million fund, and we're making average ticket around 150K, so we still have 10 investments to make.
Perfect.
That's easy question, right? We just launched the fund, so we have first close done at 32 mil, so we have 30 mil left, and we expect to close in final close at 75 mil in 2-3 weeks, so about 70 mil. So it's enough, guys, for Baltics for next 2 years, for sure.
Nice.
Yeah, just talk to him.
Yeah, exactly. It sounds like Donatas asked me to ask this question. So, perfect. So there is money, right? You still have to invest, but there was only one investment in April across all Baltic states.
That's not true.
Two investments.
What investment? What investment? What do you have in mind? Which?
One Lithuanian company.
Okay.
Yeah. So can you finish the question?
I want to bust a myth. So Estonia and Lithuania have these Google Sheets where all publicly announced deals are being tracked. First of all, a lot of those deals happened 3 months ago, 6 months ago. So there's always a delay. A lot of the internal bridge rounds are not being put in there because they're not being publicly announced. What else?
Yeah, so I mean, we had a Series A round that was announced 18 months after it closed once. So like announcements are very delayed, which is why our funding report, we gather direct information from founders and try and keep it up to date. But I'd say there's quite a lot of very early sort of pre-seed and seed rounds still happening, extension rounds, but much of it unannounced. So many founders don't want to announce that they added 500K to their seed round from their existing investors, because they don't want it to look bad.
Yeah. So that's why this year's stats looks pretty poor.
So you think it's not announced, or you haven't made investment? Have you made investment?
Oh, I've deployed capital this year.
In April, yeah? Or no? That's this month.
Yeah, I've done some follow-on investments in April, sure.
Perfect. Donatas, you were about to say something.
We've done 3 investments this year already, right? I don't know, it's in April exactly when, but I don't. Yeah, I don't think it's one investment, right? It's not that bad.
April 1st, maybe.
April 1st, that was investment. Right?
So apparently, the investments are happening. You have done some investments. Practica has done some investments.
Okay, you're digging into why are things so slow. So I'll be honest, I think things are slow. But at the same time, investors are complaining in the back rooms that, hey, we're not seeing a lot of deals. The deal volume has definitely gone down. in the last 6 months, maybe even before that. And whenever some investor says, "Oh, I'm seeing so many good deals," then I get suspicious. Like, are you just talking bullshit, or am I really bad at my job?
Which stage do you think deal flow decreased? All stages?
So I would say pre-seed is not really slowed down much. So we're doing mostly pre-seed now, and that hasn't slowed down very much. And the other things that you are seeing is seed stage startups coming back for the second seed round, i.e. the extension. And there's a lot of it. So the general, but I think the pace has slowed down. So founders were finding, so if the only experience you have of fundraising is the last 2 years, then that was a context where lots of investors were jumping on investment rounds very fast, and there was lots of ability to drive FOMO. That's much harder now because investors
Jone, you're also being very, I don't know, how it's this. Why don't you talk about what you guys are doing? Because you've been on a roll.
Yes, exactly. I think we made too many investments already. So we'll need to slow down. So expect us to slow down. But actually, I think the early stage was the most active now because there were some new funds kicking in, and then the most bridge rounds also happened at the same time. So somewhere seed and Series A, there were very few happening. I think there's some good in Practica's portfolio that has happened, so that makes things look better. But I think, so at the end of the day, so pre-seed pipeline, you say that's still fine, right? What I heard in the corridors and speaking with later stage funds that are around here, they say there are no deals in Series A, Series B in the Baltics. So what's up with that?
There are hardly any deals globally. So one of the top tier funds I talked to said last year they did a single deal globally in growth.
Yeah.
Single deal.
Yeah.
Right, so growth just came off a cliff because all the growth funds, you have to imagine, early this year went back to their LPs with the list of investments and the price at which they entered those investments and the price at which it was valued in the balance sheet now, and they were all cut down in price. And that's a really hard conversation to have with your investors when you only just made the investments like in the last 2 years. So those funds basically like screeched to a halt, and so there are the occasional growth rounds happening, but they're really, really, really hard.
I would say it's true a little bit, right? Because most of the companies in the Baltics, which are ready for Series A or Series B last year or a year ago, they're not ready now, right? We're just recalibrating when to go out, when to do a good round, because they would not get that valuation what we expect. So we just did a pause. So yes, that is much, much slower, and the guys from London, New York, we want to see more, but I would say it's numbers up to 10 companies which are ready for a bigger round right now in the Baltics, in my opinion. In a round, a bit later, so.
And the tricky thing is that the growth and A investors, they have tons of time because they're not making investments. So they're happy to meet with you.
They have time this year, right?
They have time this year, yeah.
They're here.
But, they have tons of time. They're happy to talk to everyone, but it's still very slow.
I've heard, I will not disclose which fund told that, but they had 8 people in their growth team. All of them went now on parental leave or something. So we can also assume who's in the team, but all 8, because they just don't have what to do. So, and some of them are here. So, yeah. So apparently there is money. The deals are happening. I think it's interesting how you make the deals now, right? So one thing that one of our founders touched upon is though the times there seems to be economic downturn, the costs for startups are not decreasing actually. So the rounds have to even increase more and more, right? So they have to raise bigger tickets, have a longer runway. Everyone wants 18-month runway. How do you address that? Who should pay for the inflation? Is it the fund that's actually saying, okay, we'll give you the higher valuation, or vice versa? That's the founder.
Half jokingly, I can say that I just go to a different country where it's cheaper. So Lemonade Stand invests across the Baltics and Eastern Europe, and I did my first deals in Slovakia, Czech Republic, and Poland in the last sort of 12 months. Also did 2 new deals in Lithuania, so
is that
our home turf. No,
but
there's very interesting technical talent there. So, but when it comes to the fundraising process, I think the process itself has slowed down as well. Whereas 2 years ago, like a hot deal would close in a matter of a week. Now investors have time. Okay, let's wait until the end of the month, and then you show me the investor update and the numbers, and let's talk to more customers and so forth. So that process has slowed down as well.
Why do you say investors have time? Is that because no one will invest?
Because there's less demand, so you're not competing against everyone else in this deal.
Yeah, and this is really good, by the way. So I think this is actually in founders' interests. It's in founders' interest to spend more time getting to know the investors and not rush into a transaction. I mean, I've seen some disastrous scenarios where you have very quick investment rounds, and afterwards you realize that the people you've taken money from, you're really not very easily finding it to work together. There's all sorts of arguments and disagreements about stuff that you didn't get to talk through because you were trying to get that round done like this. So I think that's actually very healthy and is the right way that founders should be thinking about it, because you should be building a relationship with an investor who you will need to work with together for at least years, if not 5 years or more.
If come back to your original question, right? Who should pay for that, right? And I think this is a balance. Who should pay? First of all, startups should think: do we really need these all expenses, right? Or we really need? What we really need is 18 or 24 months runway. That's what we really need, right? But do we really need these all additional expenses to add on? And I think the balance is striking in the deals we've seen and we are doing. And it's, as Andris said, I think it's a healthier relationship right now, because nobody's rushing. Everybody's have time to look to the spreadsheet, at least not 6 months, but 12 months. That's good, or 18 months, right? Everybody try to ask questions why this money should be spent now or later, what goals we're going to achieve. So that's important, right? Because the investment process is not only just getting money, right? This is getting involvement of investor with his experience into how to spend money. So I think it's a balance. And yes, we kind of, when we look back in practical, we usually entered companies at a valuation from 3 to 5 million range of valuation. Then it peaked up to 10, 12 million valuation. Now it's going down a little bit again. And I would say that probably, Andris, when you're going to do your next Baltic report about valuation, we're going to see probably not 10, 12, but we're going to see 7, 8, 9, something like that. And that makes sense. That makes sense because, that's how it should be. So it's a bit more money to spend, more wisely to spend, and more healthy valuation, which is going to help in the next round. Because we need to live up to this valuation, usually. So it's a balance, and everybody needs to make.
What should those startups do? So we have a big portfolio, and we see those. We give 100K, and it's over, and they still fundraising. They don't have the money, and investors say, "But it's good, we get to know each other. We get to go through your Excel." What the founders should do at this point? Do you really honestly think it's better for them, the current market?
So what the question is, they took 100K, how long was it going to last them? And so they made their bet, on how much time they had to raise the next round, right? And so at every stage, when you take an investment round, you have to think about how much time you have, and really, so the further you go on these investments, the longer it takes to build those relationships, because the bigger the capital is being deployed, right? And so typically you want to start building relationships for Series A, typically at least 6 months, if not a year, before you're actually going to close an A round, right? Seeds maybe a little less, pre-seed obviously less, but when you have that 100K, you have to think, how long do I have? And if you've only got 3 months, then in parallel to spending that 100K, you need to talk to investors about the next money.
And now, Andris, you're moving to pre-seed, right?
Yes.
Are you kind of expecting yourself to shorten the time for investments, or it will stay the same?
You mean shorten the decision time? Yeah. So we'll aim to be angel-style fast investors. We mostly have been to date as well, but yeah, even more so in pre-seed.
Okay. Can you maybe?
Can I ask a question which kind of goes to the how much money you should raise? I find myself having more conversations whether they should raise at all. Maybe is this a VC play or not? 2 years ago, again, okay, here's the money, go. And now it's maybe a sustainable bootstrap growth is the right thing, or just do one angel round and that's it. Do you have these conversations?
Absolutely, we have these conversations both with bootstrapped companies that have not raised anything, where sometimes I say, look, you should really think about whether this is for you at all, right? Like, because once you get on that train, it's not that easy to get off. And we also have those conversations with companies in our portfolio where some of them have the ability to get to break even. Maybe they have slower growth, and then you have a debate about, well, is it better to get to break even, have slower growth, but have the freedom to raise whenever you want? Or do you still want to accelerate the growth? And there's a lot of factors that go into that, and every time you should think about it, but there, hopefully you have options.
That's one of first questions I ask when I meet really early stage company, which is not sure are we ready to go this VC path? Because it's just 10% of companies can really go this path, in my opinion, even less, right? And just out of these 10%, probably just 1% are going to be successful in doing this thing. So you have to be very honest about yourself and what you want to achieve. And because good business is not VC-backed business. Any business can be great. So it's a very important question.
My view from Estonia is that for a while the ecosystem got very distorted. You had the Wises and the Pipedrives and Veriffs, and looked at that was the only path, like VC or bust. And I've always kept asking it, and now I'm asking this with a stronger voice that maybe that's not the path you need to go to.
Yeah, that's actually very true. At the earliest stage, when they come to us, I think this is where we can set this path, actually, because as Andris said, if they start fundraising, that's probably going to last for some time. So there are quite a few companies which really think, like, why would you even raise? Like, this is a proper business. Don't go this way. And I think it can be tough for them. But maybe you can name how long it will take for any startup that's now in the room to come now to you, get to know you, and if you like the company, to invest.
Like a new startup we've never met before?
Yeah, let's do it that way. If there is even one in the room that you haven't met.
So in principle, it could happen with us in a week's time, right? But that's really fast. And sort of the question is, what are the preconditions? If you're a founder who 5 different people whose opinion I really value say, like, you should talk to these guys, they're really smart, they're really talented, here's why, right? And you have a conversation, you're blown away by the story, etc. We can make a decision very fast. But it's those preconditions that drive that, how much do we want to talk to them, how much we want to dig into their background, look at the metrics, sort of evaluate ourselves what they're doing, versus have a lot of data points around to build with that.
So let's do it this way. How long did the last deal you do take? All of you.
Yeah. A week.
The last company we committed to took 2 weeks.
To commit from meeting.
So it was a week for me, but that's uncommon. I happen to know the founder since childhood, and also a lot of people around that business, so I could do the sanity check on the client side very quickly. But let's say one of the latest investments in Lithuania, Biomatter, that Praktika was the lead. That was a 1.5-year process from meeting the founder at first time, purely because they weren't raising, and then they were planning the raise, and it was just a long journey, which was great because I got to know Laurinas a little bit better and some of the co-founders. So yeah, it really varies.
When the answer is no, it's 2 weeks, right? It's easy, but it still takes 2 weeks. So we're not doing faster that. If to make a general decision, if we really want to go into the deal deeply to understand that, it takes about a month for us, and transaction going to take 3 to 6 months. That's for sure, right? It's just going to happen. The latest deal we done, we are doing it, right? So I hope to close it tomorrow. Signature should be put tomorrow. So I met the founder probably before Christmas.
Okay.
Something like that, right? So that it took. I knew the guy, but I didn't know the business, right? So I knew the guy. So it was before Christmas. 3 weeks before Christmas, so up until now we've been doing transaction, right? But we made decision probably somewhere in February, something like that.
Yeah, but so the other end of the scale from my 2-week example is a recent investment we did, which is not yet public, where I know the founders for 5 years, right? Sure. And we invested after 5 years. There's a long story, which will become public at some point, but the time to decide is not necessarily related to the time, how long you know the founders. And the key message for founders is it's really important to get to meet investors early. And actually the main advice I'd say is often if you're not raising, the first conversation out of your mouth saying, we're not raising, but I'd like to get to know you, is a great phrase, because for many investors, that's like, oh, okay, relax, right? I can get to know you. I don't have to think about, and you're pressuring me for a decision now, but you actually want to get to know the people who could be your investors. And so I encourage you to have those conversations. You need to obviously be on the ball as to what you're doing, what your aims are and sort of where you are in metrics, and they'll be listening and watching, but your goal is to build a relationship.
Yeah, but since we're dropping knowledge bombs, so my recommendation for founders out here is also, when you talk to an investor and maybe they say no or they don't say anything, like that's the first touch point. Keep bugging them, both in terms of, I still want to talk to you, your email got buried, that's fine. But also on a monthly basis, just send a business update. How are you doing? Because that starts showing data points. And even if I still don't end up investing in you, when I talk to other investors, I'm always like, you're top of mind. It's like, hey, you should actually talk to these better medicine guys, which I've made a couple of intros here, although I'm not an investor myself, or some other startup. So be persistent.
Yeah, I actually really like how one investor said that we were asking how did you due diligence, and they said like actually due diligence starts in any conference, and he specifically mentioned TechChill. So I think for anyone who's here and you're meeting with investors, this is already like a due diligence process. It's not formalized. It's you can go for a coffee and they just observe you. So I think in general, you should be chasing them. We'll come to you. You should be chasing them. Okay, one more thing I want to touch is actually, which I think is very pressing, is the bridging and the venture rounds. And for you being kind of in between the early stage, but also going into Series A and having large enough funds probably to do that, is there any strategy how you approach whom you will bridge and what should be there?
You mean what we tell LPs we have a strategy and what we actually do?
What you actually do.
Those are meant to be the same thing, right? So, it's complicated and difficult. So a lot of it depends on what kind of investor you are. So Change Ventures has traditionally been a lead investor. Certainly all of our second fund, we led all of our investments. I think you guys are leading a lot of your investments as well, right? And then most founders have an expectation that if the company needs additional funding to bridge to the next round, your lead investor will be the first one to talk to. And if your lead investor doesn't bridge, other investors may take that as a signal, right? And so then you go back to what promises did you give when you became a lead investor? But even if you didn't give a promise to bridge, there's some expectation. So we're trying to balance that. We won't bridge every time, right? So if it's not working out, we'll have a conversation with the founders and say, look, here's why we don't think it makes sense, right? Here's how we can maybe help you get to where you want to go, right? But in general, as a lead investor, we're having that active decision and we're doing everything we can to support the portfolio.
Yeah.
It's very individual, right? Every case is different, and for us, it's probably most important that company is in a stage we still can bridge and can put money, right? If the company is in B or C round and we're expecting us to put some money, it probably doesn't make sense, right? But if it's after a round we just did or we led a round, so there are two scenarios, right? We love to put more capital, then we feel that things are going according to plan, right? And the fees is going well, and we just need more money just to accelerate things. That's actually the most bridges we do right now. So it's not like a bridge, but it's just more capital into the company. When you have the hard times, right, and there is issues, you need more time, you cannot fundraise. The question is very simple: why to bridge? To what we are bridging? Just a bridge to nowhere? No, it's not going to happen. It's not going to happen. It's not the way how it should be, right? So if we have a clear plan, if we know why we're bridging, of course, we're going to take this very seriously. It's a decision we make separately from the last decision what we made. And, we try to spend as much time as possible to make a good decision. So we do that, but it's not every case, as Andris says, right? But we always have follow-on capacity for a company. So, this fund, we start probably 1 million, 2 million as initial investment, but we have at least 5 million for a company. So for any scenario, we have capital, but it's not a promise to put money in.
Yeah. Okay, so since we are almost running out of time, we have this very interesting question about saviors or sharks, which I still don't know. Like, probably you would never say that you're sharks and you're trying to use the bad time for startups to take more equity. But I think maybe overall, looking into the startup scene, are you trying now to deploy more capital in this year, or you're actually taking your sweet time? And the startups that are not, let's say, you would agree with the fact that the startups from the Baltics that are not be able to raise from you or any other Baltic VC will have very hard time raising abroad.
I'm deploying less capital this year for 2 reasons. I have a large portfolio, so a lot of my energy is spent working on the portfolio. And also, over the 4+ years now that I've been building Lemonade Stand, my focus has narrowed, so there's fewer deals to look at. So I say no more.
So we are deploying less capital in this current year because we're doing pre-seed, so smaller tickets, but faster, so more investments than previously.
We're going to be very active this year and next year for sure. And that's not just because we have a fund and we want to invest, but I think the market maturity is fantastic. And we have these fantastic teams, which some of them, coming out of other unicorns, some of them are just building new stuff. But I think it's a great time right now. The pressure, less pressure, more people, and it's just great time. So we see fantastic pipeline, honestly, right, in all 3 Baltic countries. And we actually, in the last fund, we done Sweden and Finland, as we thought is great markets, and they are great markets. But now we feel that Baltics have much more to offer. So we just cut these countries now, just 3 Baltic countries. So it's we're going to be much more active, more capital deployed, and probably we're going to deploy more capital per company. That's why we're raising a bigger fund, because we think that this is what we need to push harder, right? Because it's not going to be that simple to attract Index, Axel, Atomica to our rounds early. They're going to come a bit later, right? So we're going to need a bit more push, right? So I think that's a strategy we want to deploy.
It sounds like VCs are saviors. You wanted to do the mic drops because we are out of time.
Doing the Baby Shark song.
Okay, just before we sang the Baby Shark, because probably
Come on,
from
Siim,
early stage.
sing the Baby Shark song.
But I think this is it. So it was a really short time. I think all of you could be on stage for much longer. I really love what these guys are doing, and our all
love what you're doing, Jone.
to you. And I hope you'll be saviors. But thank you.
Thank you, Jone.
Thank you very much.
Thank you.